Hey guys, as I said, I will be making, weekly videos as often as I can, and I'm back with another one, and this time I'm bringing you as much value as I possibly can. So in this video, we're going to go over how to actually build your own ICT trading strategies using everything we've learned, but I'm going to give you some hints and tips on how to do it effectively and how to backtest essentially building your ICT strategy to allow you to build a strategy that works for you and is really tailored to the way you trade, the way you want to trade, and to make you successful at trading. So obviously we've all seen, ICT's mentorship. If you haven't, I do recommend having a look at it. It's where most of the teachings and the fundamentals of this video come from. But if you don't have enough time, it's fine. I've made sure to essentially summarize the different things. You'll know of all the topics that I mentioned in the video because I'll state them clearly, and once you've done your research and background research on it, you can go and learn it yourself and then trade. So I've drawn a diagram here just so you're not looking at blank space like this, but I want to cover a couple of different things. So this video might be a bit boring, so grab an energy drink, have a coffee or something, and it'll be hopefully it'll be all right. So ICT is one of those let's say teachers that has put out content on YouTube for free, and we're extremely lucky to have someone like that in the community who is offering golden nuggets for you to learn from. But not only has he been delivering us golden nuggets in terms of tips and tricks to trade the markets, he's also been giving us direct strategies, like for example the ICT silver bullet strategy and others that he's given. Over the years, ICT has given us order blocks, he's given us fair value gaps, he's taught us how to find daily bias, he's taught us the concept of liquidity, where it is, how to look for it, how to find it, and how the market moves to take liquidity but also build it. And then also the key fundamental around timing with his session kill zones as well. Now, with all of these teachings, we can actually build a strategy. But when it comes to building a strategy, there are a couple of things that we need to make sure that we have in place. And now, one person's strategy should be different to another person's strategy because one person will trade differently. There's always preferences, there's always timings, there's always little things that are different between two people trading. And so I'm going to go through a couple of things that you need to learn about when it comes to trading. But before we get into that, really quickly, let's just summarize a couple of the ICT teachings I just mentioned. So order blocks, as an example, these are, let's say areas like this, where price moves away from, it leaves an order block. Let's go like that. To move away from, we have fair value gaps here. So this is when the candle is like this, and the wick to wick here, and then price hasn't come back and filled this gap here, so that's going to be from the bottom of this wick to this wick really quickly. We have liquidity, so this is stuff like equal lows here, or relatively equal lows. We got trend line, you can say from here to here. As price comes, there's stop losses below these points here, here, and here. And that's just very briefly going over those. And then kill zones I'll go over in a minute. But when it comes to building your ICT trading strategy, you want to be looking at 4 different things. So the first one is timing. When you take a trade, you want to obviously take it at the same time every single day. It allows it to be a repeatable process, and that means that when you're looking for things that are going wrong, you don't have to look at the whole day chart. You can look at a certain time period within the day and just memorize and learn how price moves during that time. Now, for each person, that's going to be different, and there's 2 different types essentially to do. So one is time of the day. Okay, so maybe that's the London session, and that's why I always have these sessions on. Here's the Asian session, here's the London session, here's the New York session. If you dedicate your sole trading career to one session and become a master of that session, you don't need the other 2 sessions to become a successful trader. You only need the one. So the first one is, when you're picking your ICT trading strategy, what time of day is best for you? Maybe you're working part-time, or maybe you have other responsibilities that stop you from trading during certain times. Pick a session and dedicate your trading career to that session and your trading strategy to that session. So that's the first thing. And then following that, and which makes a lot of sense as well, is pick the day of the week. Maybe you can't trade every single day of the week. Maybe there's certain days of the week that you can trade. So pick your session for that day and pick that day of the week that you can trade and dedicate your strategy to that. So now you've got your two fundamentals. This allows you to trade, right? You're not trying to trade days that you can't even be, online, on your computer, on your laptop, ready to trade. And you're not trying to, do it while you're at work. Give yourself time, have the time available to trade, pick those times, backtest those times. That's what you need to do. Second one is time frame. Now, this is where it differentiates, right? You can pick the London session as an example, but some people might just want to trade it on the 15-minute time frame, others on the 5-minute time frame. So pick your time frame, and that's something you're going to dedicate to, because what you want to do is you want to learn how price is moving on that time frame. And it doesn't have to be one, maybe you pick two, but you want to make sure you keep picking them and looking at them consistently. I always suggest at least two, but one is fine as well. So at least one, no more than 2 to 3 as a maximum. So have that as a cutoff. And then finally, you want to be looking at essentially liquidity within that time frame. How is price building liquidity? So obviously, if we look at this one, for example, we got a low put in here in the market, price pushes up, pulls down, creates another low. Straight away, we know we have liquidity here, right? Price pulls up again. We can see obviously price is trending really nicely here, and it comes back down into this area. Really nice trade actually on this one. If we just trade in the London session, look at this pure trending price action. That was a nice buy at this point. But yeah, right, in terms of liquidity, we have that there. We can maybe move this out here, and we can say, look, we got some trend line liquidity being built here, and then obviously that extends over into the New York session. But straight away, we're looking at how liquidity is built, but also how it's taken. So looking at the London session here, if we look left, first we notice it takes Asian session liquidity here. It takes these two relative highs. That liquidity is taken by this move up. This move up here takes this liquidity here, right? That gets taken. And then this one here, we can see it's built here, right? Got high here, that doesn't take it, but New York takes it. So it's interesting. So that's where you're going to start to come to the point where you're looking at, right, does the last high or the last low of the London session build liquidity for New York to take? So obviously, because New York took this one. So that's like a let's say a theorem you're going to throw out there. Does price do that? If it does, great. If not, that's fine. And going forward, that's what you're going to keep on looking for and understanding and learning. And then you're going to write them down. You're going to back test them and see if it happens all the time. If it doesn't, okay, fine. If it only happens on certain days, what days, and learn and then learn and then learn. And essentially, you just want to be obsessing over stuff like that. And then the final thing is, once you've found certain things happen all the time. So let's say, oh, London session tends to trend often when certain things happen, like, I don't know, we get one, maybe we get price takes Asian high and then it starts continuing to push up and it's showing us that we're moving up. That means the third move up. So 1, 2, 3, this move up is the move you can take to trade, and that's where you can enter on a trade. And so you'll be always looking to enter. But then it comes to, what is your entry drill? Am I entering off of a fair value gap? So would you have entered between this gap here, right? And that's where your entry is. And then where do I enter in terms of a order block? Is it in here? Right, I'm sure there's a red candle in there somewhere. Yep, there it is. Do I enter off of here? And then you're going to be like, okay, so with this repeatable thing I see over and over again, is price entering, or is it better to enter off a fair value gap or an order block? And so that's how you're going to go forward and refine that strategy over and over again. And these are the things that you want to backtest, right? So you pick your day, you pick your time of the week and of the day and the session. Then you're going to look at your time frame. So is it 5 minute? Is it 15 minute? Is it, I don't know, 1 minute maybe? And then you're going to look at liquidity. What sort of liquidity do I need price to build? What sort of liquidity does price build during my time that I want to trade? And then you're going to look for certain types of trades that happen over and over again. Then once you find those over and over again, you're going to be like, okay, so this trade happened, or this move always happens, or the third push up, for example, over here, and it's always best for me to enter off an order block. So that's what you'll do over and over again, and that's it. And so that's really it for this video, if I'm honest. Again, stay tuned. Every week I'll be releasing videos as and when I can. I'll try and keep consistent to this. Moving forward, like I've said, if you haven't already, go to my website, put in your email address. I'm be releasing some software for traders very, very soon. So stay tuned for that, and I'll keep you guys updated. Thank you for your time on the video today, and I will see you in the next one.